With my strategy, I used to target huge risk-reward ratios, like for example this one. But now a question can be asked: what is the best risk-reward ratio for long-term profitability? So right here I have a tab that is the risk-reward ratio versus the win rate, as you can see. So depending on your win rate, your risk-reward ratio can vary and will vary. Why? Because imagine, okay, you have a, let's say, 50% win rate. To be profitable with a 50% win rate, you need a minimum of a 1 or 2 risk-reward ratio. Why? It's because imagine that one trade fails and one trade wins, so that would be a 50% win rate. That equals that you're gonna be 1% up, 1% down, 1% up, 1% down. So at the end of the day, you're just gonna be break even. That's why right here we are having this 50% one-on-one break even. So to be a profitable trader, you need to have at least a 1 or 2 or like a 1.1.5, something like that, with a 50% win rate to be profitable. And of course, more your risk-reward ratio is big, if you still have a 50% win rate, more you're gonna be profitable. But guys, it's really important to first of all identify the win rate of your strategy, because if you don't know your win rate, you will not be able to fix a good risk-reward ratio. Then guys, I'm gonna tell you something, okay? If you're targeting 101, you need a minimum of a 60% win rate. Usually strategies with a 101 risk-reward ratio, their win rate is around 70, maybe like 75, something like that. But the more you increase your risk-reward ratio, of course price won't always follow you. So let's say for example you enter right here and you enter at this, let's say, point of interest, and you're targeting, let's say, the low. By the time price reaches this 110 risk-reward ratio, nothing is confirming you that it will actually push down. It might just instead push up and hit your stop loss. That's why when you have a high risk-reward ratio, automatically your win rate drops. It's kind of connected, right? If you target always 101, it's always, you have way more chances of hitting your 101 risk-reward ratio than to hit your 1 to 10, because by the time price here, it's not by the same time that price is like here, right? So this is why you need to think about, are you ready to sacrifice some win rate to have a higher risk-reward ratio? For example, my strategy is around a 50, let's say 50, 45, 55% win rate, somewhere around right here. So my strategy is good. Why? It's because I know that I'm targeting minimum every single time a 1 to 3. So if we're looking in our tab, 50, 40%, 103 right here, we're in the green. So that means that the strategy is profitable. But let's say, for example, that I had a 20% win rate or a 30% win rate and I was targeting 103. For example, here at 103, 20%, it won't be profitable. Same thing with 30% at 102. So this is why super important to find a strategy that is corresponding to your win rate. Now, another thing that I want to talk about, having a better win rate sometimes is better than have a big risk-reward ratio. I'm gonna tell you why. First of all, it's because my strategy, you say, I'm talking about experience, and my strategy has around a 50% win rate. So that means that my trades are winning one time and losing one time, but it's not always happening one after the other. It's not like, for example, I have one trade that is losing, one trade that is winning, one trade that is losing, one trade that is winning. Sometimes it can be multiple losses, then a little win, another loss, multiple losing streaks, and then a win. So if you see it like this, the moments that you have the losing streaks right here sometimes can be really impactful on your psychology. That's why people who are trading with a high win rate usually are more experienced, because they can handle losses better. If you are a beginner, like for example, just to go back to my explanation about the win rate and the losing streaks, if you are a beginner, like I was explaining, sometimes you want to have a higher win rate and a lower risk-reward ratio, so it's not impactful on your psychology. My strategy is really powerful. Why? It's because I have 1 to 5 risk-reward ratio trades, 1 to 6, and sometimes even more. So even if, for example, I have 4 trades in a row and one trade, I can completely recover my losses if 4 trades in a row has lost, right? So this is like a proof that my strategy works. But at the end of the day, if for example you cannot handle your losses well, if for example you have some issues with your psychology, maybe you should reduce in your risk reward ratio and focusing on a higher win rate. Like that, more of your trades will win, even if it's a smaller percentage of gain every single time. On the long terms, for some people it works best. Of course, my strategy is really powerful because when we have good weeks, like for example a 50%, even 60% win rate, it can go up to 20% a week with my strategy because of the high risk reward ratio, right? But when you have losing weeks, yes, sometimes we're in drawdown or something like that, but at the end of the day, the strategy is really powerful, but you need to trust your strategy. No matter what is your strategy, no matter what is your risk reward ratio, no matter what is your win rate, you need to keep trading your strategy every single time the exact same way with the exact same rules for it to be profitable. Because if you change the rules of your strategy, or for example, you take a trade with this confluence and then you take a trade with another confluence, your win rate won't be the same because the strategies are not the same. So this chart won't work for you because your strategy is not consistent. Okay, so now you will tell me, okay, but how do I know my win rate and the best risk reward ratio to take according to my strategy? First of all, you need to backtest your strategy. If you never backtested your strategy, you just took a strategy and you started trading it straight away in the market, you're wrong. Because first of all, you don't have enough data about the strategy. Second of all, you don't know if you're making any mistakes. Third of all, you're not going to be able to practice as much as if you were in your backtesting, because again, in the live market, price is moving like seconds by seconds, minutes by minutes in real time. In backtesting, you can go back 5 years ago and see if the strategy is working, and then you can collect data. This is why backtesting is super important. So the best website / software to backtest, in my opinion, is FXReplay. Why? It's because it's analyzing your trades and it's really user friendly because it's a trading view chart, as you can see exactly right here. So basically, you enter your trade, you can place the order, and then everything will be saved, and you can as well journal it. Anyway, FXReplay, there's a lot of videos. I already did a video as well on the tools that you can use on ForTraders YouTube channel. The link will be in the description. You can watch it. I explain how to use FXReplay, but backtesting is really important because you will be able to see, first of all, the analytics of your strategy, as you can see with the win rate, the account balance, how much you're up, your P&L, and your risk to reward ratio. So this is where you will be able to see, based on this, if your strategy is profitable. So as you can see right here, if we go back to FXReplay, my win rate is around, in this case, 57%. with an average risk to reward ratio around 3.71. So if we go back to our little tab, 50%, 103, we are profitable, as you can see right here. And this as well shows with the overall P&L that is up 8, even 9% in even 7 trades, as you can see right here. In even if like 3 of them lost, as you can see right here, 4 wins and 3 losses, we are still up to 9% because the strategy is super powerful, as you can see. But if you don't know if your strategy is powerful, if you don't know what is your average win rate and your average risk to reward ratio without having any data, you won't be able to find your best risk to reward ratio to target. And as you can see, guys, as well, FXReplay is really nice because it can show you your overall max risk to reward ratio that you had per trades, and it can as well suggest you an ideal risk to reward ratio based on your data to see how much you can increase your risk to reward ratio and still be profitable. So guys, this is really interesting because this is showing you all the data about the strategy. But overall, I really recommend you to backtest your strategy, collect the data, collect the risk to reward ratios and the win rates about your strategy, and then find the best one that suits your needs based on this tab. And to go back to my advice for beginners, really, I recommend you to first of all find a strategy that is at least a 50% win rate. If you go lower than a 50% win rate, that will be impactful in your psychology. So 50% and more is good for beginners. For experienced traders, you already know that even if you have more losing streaks, if you trust your strategy, you'll still be profitable if you have a high risk-reward ratio. But for beginners, 50% and more is a good deal. And of course, if you're targeting at least a 102, 103, you will be profitable. So yeah, guys, there's no need for you to target like huge risk-reward ratios like 1 to 9s, 1 to 10. Don't be too greedy, because like I was explaining, price can completely reverse on you and you don't want that. And overall for your psychology, it's not gonna be good. So that's it, guys. I hope this video helped you understanding how to define better your risk-reward ratio compared to your win rate, and how to find the best one for your needs. If you have any questions, guys, don't hesitate to just comment them down below. I'm always reading the comments and I will reply to you to all your questions. If not, guys, we're gonna see each other next time for a new episode of Koshkah's Academy of Trading. And don't hesitate as well to like and share this video with other traders.